Hi everyone and welcome to my morning report. Charles Prices on Nonfarm Payrolls Friday on Friday the 1st of September with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of risk positive move really. Today we've got equity markets that are higher. Let me just show you the board. We've got equity markets higher across the indices really in the European session. That followed on from a Wall Street rebound, 0.5% higher. Asian markets were higher as well. And what we have seen is just a continuation, really, of this, or a resumption, arguably, of the dollar little rebound that we've seen. But is this a dollar rebound that's going to get sold into? It'll be interesting to see how the market sort of reacts to payrolls today, because obviously the dollar sharply broke down, continuing that downtrend channel broke down last week, rebounded a bit this week, but into sort of resistance band really, and this is coming as treasury yields have just been continuing to fall away on the 10-year and the 2-year, just trending lower, and that sort of helped to keep the dollar under pressure. We have got is two major sort of economic announcements today: non-farm payrolls and the manufacturing PMIs. Let me show you the data. We've had UK PMI came in ahead of expectations, and that's led to a bit of a rebound on sterling. Not too much, about 15 ticks higher sterling on the back of that. That was a 4-month high on the UK manufacturing PMI. The Eurozone data came broadly in line with expectations. So no real surprises there. But then we're looking at payrolls this afternoon. At 1:30, we've got non-farm payrolls, 180,000 expected. Unemployment sticking at 4.3%. Average hourly earnings on a yearly basis, 2.6%. Now let me show you some of these charts. Non-farm payrolls initially, 180, basically in line with that 6-month average. So that would be sort of a broadly neutral report. 4.3% expected on that unemployment. Also, is that unemployment bottoming? Potentially, you also look at the underemployment, the U6, which has sort of been around about 8.6% for the last sort of 3 or 4 months now. Average hourly earnings is the big component that the market would really be looking out for, apart from non-farm payrolls headline. Look at that, throughout 2017, falling away back to 2.5%. It's expected to pick up to 2.6%, so that would be sort of an improvement, yes, but it'd need to be a sharp improvement to really get the sort of the dollar bulls trying to push that market higher again. But yeah, really the average hourly earnings and headline payrolls are the two factors that we'll be looking out for today. Then you've also got, get that list back up, you've also got the ISM data this afternoon, expected to be sort of broadly in line with where we were last month at 56.5 on that US ISM data. So we do have, as I said, markets still consolidating really, a little bit of dollar strength, but nothing too significant. But the risk positive attitude are coming through on gold, but also these equity markets that are all higher today in front of payrolls. So that takes me to my chart of the day, which is the DAX. Now the DAX has been rallying in the last few days. That's the intraday. Let me show you the daily chart. Back to this downtrend. Now this downtrend has been in place for the past sort of 2.5 or so months. It's back to this downtrend resistance. You would argue those candles in the last few days have not been excessively positive, have they? And you sort of look at this rally, you think the momentum indicators back to levels at which the selling pressure tends to sort of come back in. Let me show you that. RSI sort of tends to fail around the 50 level, doesn't it? It's currently around 46. Back to that downtrend. You got the MACD lines hardly picking up at all. Stochastics, yes, have ticked higher, but I think this is a key level now for the DAX. You need to start seeing that downtrend being broken. You're sort of back to around about that 12,100 level, which has been sort of pivotal really on the DAX. Sort of mildly above it, but it'll be interesting to see because the hourly momentum indicators are back at levels at which the sellers have been sort of returning in the last sort of couple of weeks. MACD lines retreating back to neutral. Stochastics have rolled over, but just ticked higher a little bit with today's opening gains. But as I've sort of said, in recent days, the opening gains have lost traction throughout the session. So is this another opportunity to sell? I think it depends on payrolls initially. I think a strong payrolls report would be risk positive. Risk positive means DAX higher. So a strong payrolls report would be something that you'd be looking to push the DAX through that downtrend, and maybe even up towards sort of the levels at which we can start to think about testing that those late August highs. But the key level to look out for is this old key low, 12,340. That's still quite a way away, and there's no real need to sort of think about that quite yet. But we need to think about breaking the downtrend first. But that would be the big level that the bulls would need to break through, because that's the level that that throughout August was failing and subsequently rolling over to new lows. So we have a rebound on the DAX, but is it now going to be another selling opportunity? Obviously, I think payrolls could be a key aspect of this chart near term, but the momentum indicators are certainly not suggesting we're going to get a decisive breakout. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.